Here we are, price line gap up 5. We had the jobs report. Everyone is coiled up on that. Today will be day 4 of our bottom rally up that started on Tuesday when the markets were down huge. We were down 250 points on the Dow. We did everything that we wanted it to do. It worked well off the bottom. Now we're getting up into the topper end of the range. It is a Friday. It is earnings season starting Monday. Today's date, 10/7/2011. Here is the gap open up list once again on the NASDAQ comp. And what stocks have done in the first 3-day rallies, they go up, they get sold short, they come back to their support level, but then they run right back up into the upper end of the top end of the ranges. So with the amount of jobs report data today is really not the key factor that's driving the market. It is really the European Union. And it's about the good bank, bad bank. I've talked about it every day. It's about how to, the bull rally is based on the fact that it's not going to get worse and that they feel that the tension is lower per se. But once again, bear markets have the greatest rallies in both directional movements. And most people are not involved in this 3-day starting 4-day rally because they're always on the sideline. They're too scared to make a transaction. They're so frightened they don't know what to do. And as the stocks continue to go higher in their 4 or 5 days, it'll always be right about where the reversal starts, where people try to come back into the marketplace. This is the protocol. It will not change. The thing about it is that at some point in a 1 day, we got the reversal. To the 3rd day, we continued yesterday. Today is the 4th day of the 1075 low in the S&P. S&P is rolled up like always, about 100 points. But I will tell you that the majority of the crowd have been left behind. Now, what can fuel them higher is the people who come in and start feeling, well, you know, it's time of year and seasonality. We're supposed to do a lot of things. We are not changing. We feel that any movement upward in the earnings is to be sold short for the longer term. We do not see sustainable growth, nor do we see sustainable job growth, nor do we see a sustainable government in the U.S. And that these rallies are being created not from the U.S., but from Europe. And if the banks don't collapse, well, then that's a big victory for the bull, which it is. However, it's a Band-Aid effect that will have consequences in 2012 to be paid. And it will end up being this way. We were going to look at, once again, at any point in a 1 to 5 day rally off the bottom, in a big bear rally off the bottom, meaning that the bear gets squeezed and the bull, so you get a bear upward, the bear has to come out at certain points, and that's how the short interest comes off the tape in the wall of worry as we climb higher to certain upper end price action targets, where at eventually within the cycle, and it could be today going into the weekend. And remember, buy the rumor, sell the news, buy the rally. The day that it started on the bottom on Tuesday was that, as anticipated, things aren't going to be that bad out of Europe. Well, they're not going to change for a number of years. And it's all about super hyped up volatility and mindsets at play in the exchange model with the individual buyers and sellers at hand. Look to short the upper end of the gap. But once again, it is day 4. If they hold the higher support levels, and they're not going to want to break down just because, Google's always going to pull back $4. Okay? And shorting the pre-market gap is the right thing to do. Market opens up in 14 minutes. I have concluded the gap open up. And on the other hand, on the gap open down, here's a biotech company down $14, and I put the news out on it. So some of these gap downs here are probably earnings related or some kind of relation. But the gap down list is very small. But then on the other hand, the gap up list is not real big, but it is day 4 of a gap up in pre-market. Okay, and we've had 4 of them that way. So what I would like to tell my MMTs, trade management stays the same. Nothing has changed in that, because it hasn't. And I'll just show the NYSE very quickly. The gap open up. 60% of your program trading is right here. You have a fairly little decent gap up. We have lots of pre-market analysis that we do before the trading day, and you've seen them where they've been all down, and you've seen them where they've been up. That's the gap open up on the NYSE. The gap open down is very minimal. It's about the same distance, but it's not a long list. Some of your companies may be sold down as we approach the earnings next week. There could be headline events that are related to the gap downs right here. Okay, BUD, Walter Industries. I don't see where the CEOs have anything good to say. It's a volatility jobs Friday. It's a European debt crisis gap. It's where the bull gets in like they've done at every calendar yearly low. The thing about it is it's nice to take them up while they go, but then getting right back below the market where the put side gets real cheap. And in the short-term 5-day, the call side is getting up there. It is a options weekly expiration on calendar date 2007. Or I'm sorry, 10/7/2011.